And I have trouble, I want to be clear, I have trouble separating my emotions. I do not like the man. I think he's a terrible role model for young men. And I have trouble distinguishing my disdain for him.
On the left, we have long-term Tesla bull, fashion icon, and Mr. Catchphrase himself, Dan Ives. On the right, we have long-term Elon and/or Tesla hater, orange man bad hater, TRT patient, and a man who historically, every single time he has ever made a prediction about Tesla, has been wrong. Scott Galloway. I've yet to watch this, but on my daily search for Tesla-related content, this came up, and it appears we're going to have a Tesla bull, explain to a perma bear why he's bullish, and the perma bear is likely, I'm assuming, if history is anything to go by, to either strongly disagree with everything Dan has to say or just not get any of it. Now, I don't want to judge the conversation before it's happened, but Mr. Galloway here has been very vocal about Elon Musk and Tesla for many years, and every single time, I mean every single time he has had anything to say about the company or any predictions, it's been wrong. Maybe he's changed his tune. Who knows? Maybe today's the day.
It's no secret that I'm a Tesla bear, and you're a famous kind of Tesla bull. My sense is, look, cars are a low-margin business, terrible corporate governance. It appears that similar to the streaming market, it garnered such incredible shareholder value that it's attracted a ton of competition that's resulted in a bit of a price war and is impacting their margins. And when I look at the multiple on earnings of Ford and GM at 5 and 8 respectively,
I think so far I can sum up Scott's new position on Tesla. The competition's coming, margins collapsing. P.S. They're definitely just a car company. Therefore, we must ignore everything except the automotive business. Therefore, valuation makes no sense. Therefore, allow me to compare Tesla to some actual just a car companies, Ford, GM, etc. Compare multiples because Tesla's just a car company, and ignore the fact that these other actual just a car companies are trying to make electric vehicles, losing tens of thousands of dollars per vehicle sold, and the whole world's moving to EVs, so they're fucked.
Ferrari at 50, and then Tesla at, I think it's 99 times Ford PE. That's my bear case, but I want to give you the opportunity to make the bull case.
Well, look, Scott, I think some of the smartest people I talk to are Tesla bears. And I talk to bears all the time because it's very important to understand the bear story in Tesla if you're bullish. And I think it's important to always both sides of every story, right? In terms of bull and bear. Look, my view is Tesla is not an auto company. I've always viewed it as a disruptive technology. Therefore, comparing it to a GM, a Ford, a traditional car company, I've always viewed as an apples to oranges.
This is the essence of the Tesla bull versus bear case. Actually, no, there's two Tesla bear cases. There's still living in your mum's basement in your 40s, depressed, pessimistic, hateful, angry, envious, jealous. You look at Elon, he's everything that your life could have been but isn't. You loser. Therefore, Elon bad. Therefore, Tesla bad. Therefore, nothing you could possibly say about Tesla will change my mind. Tesla's a terrible company, terrible investment, terrible stock. P.S. Elon bad. You know, the kind of people that come up with Tesla's computing accounting fraud. Just the deranged stuff, right? There's the deranged bear case. And then there's the doesn't fit in cell D39 on my spreadsheet bear case, which is Tesla's just a car company. They make products that have wheels and windows and doors and move people around just like all the car companies. Therefore, that's what they are. And if there's anything that suggests that they're not just a car company, but in fact more, I will ignore that because I can't stick it in my preconception, in my spreadsheet of what a car company is. So already early in this conversation, we've got to the crux of the matter, the distinction between the bull and the bear case around Tesla. What I find truly remarkable is that many supposedly intelligent people, when presented with any evidence that suggests Tesla isn't just a car company, you know, the hundreds of people working on AI, the literal billions of dollars per quarter Tesla's spending on AI training, the staggering mountains of data their fleet's collecting, the fact that their fleet of 7-ish million vehicles is covered in sensors, and there's no other company that has that. They're not the same things. Their energy business, including the storage products for homes and utilities and the software to distribute energy, to engage in energy arbitrage, essentially day trading energy, to see the capabilities of a Tesla vehicle using FSD, to see that, for a smart person to see that and not be able to, no pun intended, compute and understand what they're seeing, something that no other supposed car companies can do, and go, hang on a minute, oh, it's kind of weird that I haven't seen Ford being able to do that. Or worse, they outsource their thinking to supposed experts, you know, the kind of dorks who publish autonomous leaderboards that are literally upside down with Tesla dead last. It's just one of the strangest studies in self-deception and delusion for these poor people who are, a lot of them, quite smart, too smart for their own good, to, for whatever reason, just be unable to see what's in front of their eyes, or at least to understand the implications. Poor old Mr. Galloway here again. It's been years that this guy's been making predictions about Tesla. Not getting the company, just to cut. It's embarrassing. But the guy's not a moron, at least. I mean, probably do okay on standardized intelligence test. Scott is the perfect representation of a typical Tesla bear. No new information will change his opinion. And all the existing information that doesn't fit into his worldview, e.g. Tesla's just a car company and or Elon bad, by the way, did you hear the funny point? Terrible corporate governance, just ignores. Again, I'm going to make a pretty safe bet. I don't think Dan is going to change Scott's opinion today.
Now, in terms of the vision playing out, that's where now the next few years, full self-driving, autonomous, robotics, in other words, the non-auto piece really needs to play out for this story to reach, what I believe is $1.5 trillion valuation. And I think it's gone through probably one of the more difficult periods for Tesla in the last, call it 4 or 5 years. If you look at the last 6-9 months, I mean, China's been very competitive, pricing pressure. We've seen it in terms of earnings. This is kind of now a baton handing from, let's say, the auto piece to the disruptive tech. But now it comes down to Musk and Tesla proving it.
But I want to double click on both of those things. So it's not fair to compare it to the automobile companies. I think there's some legitimacy to that. It's not Ford. I'll grant you that.
Wow. This is quite a moment. This is progress. Kind of funny. I'm pretty sure he literally mentioned Ford moments ago when he was referring to multiples on earnings and Tesla's valuation. I'm pretty sure Ford was one of the companies, including Ferrari, GM, Ford. But I think I can sense where this is going already. But that's what's coming. But today, XYZ% of their total revenue comes from automotive. And again, since Scott's a smart guy, I'm sure that he knows that investors don't invest for today and now, but the future. That's the whole point of investing. Investors seek a return over time. Operative word there being time, suggesting it's not about today, it's about the future. Smart investors, and by smart I mean investors who over the long term get returns on their investments, tend to see opportunities that will manifest themselves not today or tomorrow or next week or next quarter, but further into the future before everybody else can see. That's where the real opportunity is. And Dan made an interesting point there, a pass the baton moment from automotive, which today, it is true that today automotive is a huge portion of Tesla's total revenue. But again, you have to look at the foundation of what they built with AI, FSD, the data lead, what they're doing with Optimus, the energy business, and all the other stuff that's been brewing and building in the background. Anyway, I've got to give some credit to Scott. He's at least admitted that Tesla is not just and only a car company, kind of. He said it's not exactly like Ford, so he grants Dan that. But I feel like a big but is coming, and not the kind that you like and cannot lie.
But what industry do you think it compares to that would justify 95 times its forward PE? And two,
so there's the but. Interesting question, by the way. What industry does it compare to justify the valuation? That question presupposes that Tesla can fit into a nice little neat box and go, oh, it's just like this or that. That's the challenge with Tesla. The company doesn't fit into any nice, neat box. If you really wanted to think about the company in this manner, you'd have to break it apart into each different aspect of its business. You look at the automotive business, value accordingly. But then you'd also need to consider the software and services business on top of that, which is a much higher multiple. But then you also need to consider the energy business, which at this point, I don't think investors are understanding. I mean, this thing's growing at a ridiculous rate, insanely high margins, near infinite demand, because these things are money printers. They're no-brainers. It's not a consumer purchase where people are trying to add a few inches to their micro dong or to their height. Commercial customers buying fuck-off gigantic batteries. Look at the numbers and go, wait, how many tens of millions of dollars a year is this thing going to make us and or save us? Oh, okay, yeah, we'd like as many of those as we can get, please. Tomorrow? No? Well, we have to wait 2 years? Okay, well, we'll wait 2 years because that's how good these things are. Totally overlooked. I mean, I could see a time, if the shit is still hitting the fan with interest rates, I don't expect it to be, but then again, I'm the same guy who didn't think rates would go up as much as they did, as fast as they did after the scamdemic and the supply chain challenges due to the fascist lockdown. So that whole thing and the financial stimulus, I didn't expect rates to go that high. So what would I know? There could come a time when Tesla's energy business, stationary storage, is printing more money, as in more profit per quarter than the automotive business. Now, I don't expect that to be a long-term thing, but it's possible that could actually happen. Imagine that. Imagine if this whole time everyone's like, Tesla's just a car company. Next minute, their automotive business itself has profits that are being dwarfed by the stationary storage business, which is still growing at a faster rate. But then you also have to think about the stuff, the intangibles that aren't currently being valued. They can't be yet, right? The data that Tesla has collected from their fleet over the last nearly 10 years has to be worth many billions, if not tens of billions of dollars. That data is the key, the actual key to unlocking a $10-trillion opportunity with autonomy. There is no means of valuing this. There is no comparable industry where, the only source of real-world data at scale that can be used to solve autonomy, that's the necessary piece of the puzzle. You can't do that, but you have to consider this. And the opportunity with humanoid robots could potentially unlock a multi-quadrillion dollar, by the way, I'm not kidding, market. Just scale up global labor. Look what world GDP's done over the last few thousand years. And so if you want to value this based on what's a typical multiple for a typical, you got to break everything apart. Then you've got to figure out all the stuff that's not happening yet, but the foundation's been built. Plus all the intangible things you can't value. Like there is no market for valuing a fleet of 7+ million vehicles, collecting real world data plus the existing archive. There's no way to value that because there's no examples. There's no industry norm. It's never been done before. Story of Tesla's life. But that gets to a point where it's so complicated and stupid, it just doesn't make sense. I think the way to really think about this is to map out each major segment of Tesla's business, not today, but in the future, which will include the automotive business, the energy business, autonomy. And I'm not just talking about people paying for FSD per month, but I'm actually talking about robotaxis as well. Cents per mile, Tesla's cut, how many miles, blah, blah, blah. Plus humanoid robots, what people are paying for those in terms of hardware plus software. The potential growth of those over multiple decades. And then to work your way back to today and assign what you believe is a reasonable multiple on those future earnings, factoring in some risk and uncertainty. The problem is you will come up with a number that is so astronomically high relative to a car company or any other comparable in an industry because of what Tesla's doing, no one's done before, and the potential of these things. They're literally going after multiple, multi-trillion, and in some cases, deca-trillion or larger markets. You end up with a valuation and a multiple so absurd that people like Scott are like, what, bro, it's like nearly 100 times their earnings. I think Scott's one of these examples of being a little bit too smart for your own good. The poor guy seems to be searching, well, if it's not just a car company, where's the number? What's the convention for valuing a company like Tesla? There isn't one, Scott. That's the problem. There isn't a convention. That is the challenge.
The autonomous driving argument is the one I hear from Kathy Wood, who says that she estimates that 90% of its revenue or its profits will come from autonomous driving. I feel like shareholders of Tesla have been on a corner waiting for an autonomous Tesla taxi for 7 years now, and that the company has very little credibility around timelines. And let's assume
Scott makes a fair point regarding timelines and autonomy. Tesla's credibility, certainly not great. But see, here's the challenge. Forget the past and Tesla's over-optimism. Again, this has never been done before, so predicting exactly when it happens, kind of tough. You don't know what you don't know. The way that I personally think about this is rate of progress plus confidence level. Back in 2021, when I first published my Tesla valuation model, I had estimated that in late 2024, the first commercial Tesla Robotaxi would begin operation. That was back in 2021. We're now multiple years later. And during that time, I've been able to watch the progress of this software. Back then, it was a relatively low confidence prediction. After the breakthrough, completely redoing FSD, training it purely on video, end-to-end, no heuristics, deleting 300,000 lines of code, my confidence in Tesla's ability to solve autonomy massively increased. As I said at the time, there are now no more unknown unknowns, at least that I can possibly conceive of. Prior to then, there were. But now, from my perspective, the path to Tesla solving autonomy, not running into roadblocks, solving autonomy, is clearly illuminated. My conviction that it will happen has never been higher. And this conviction has increased in step changes over the last few years. And during that time, it's not just my conviction that they will solve this challenge that has increased, but clarity around exactly when this happens has also increased. When I first published my Tesla valuation model back in 2021, by the way, you want to see the latest version recently updated, check the link in the pinned comment, join Patreon at the investor level and above, or better yet, make your own model. But if you want to see the assumptions and maybe why I'm still buying Tesla stock with every spare cent, spoiler alert, it's in the valuation model. So when I first published my valuation model in 2021, there were no examples of Tesla vehicles on FSD doing end-to-end intervention-free drives, point A to point B, maybe point A to B to C to D to E to F, to major cities in the United States, including San Francisco, over 7 minutes, 10, 15, 20, 30, 40, 60 multi-hour drives. There were no examples of this happening. Today, there are clear progress. So to me, from my perspective, Tesla will solve autonomy. This is now inevitable. And the software is improving meaningfully over reasonable timeframes. So to Scott's point, historically, Tesla, not a lot of credibility around FSD timing. They were doing stuff that had never been done before, so you can't blame them, right? But now, today, we can see the rate of progress. We can see what the software is capable of doing today. And if you understand how this software is operating now, it is only a matter of time. Now, how long it takes, nobody knows. I'm still guessing. Again, you can see my guesses in my Tesla valuation model. I now distinguish between the bear case, the base case, the bull case, and the hyperbull case as to when the first Tesla Robotaxi begins operation. But if you, like myself, believe that Tesla A will solve autonomy and B are making massive progress, meaningful progress in reasonable timeframes, then whether they solve it in 6 months or 69 months makes no difference to me. The reason, of course, is because I'm a long-term investor, not a short-term gambler. Were I a short-term gambler, I'd be trading in and out of the stock like a moron, paying a bunch of capital gains tax, telling everybody that I'm a genius when it works out and pretending I didn't make any trades when it didn't, probably selling courses on how to make lots of money in the stock market and make a lot more money selling my courses than trading. And I'd be asking for trouble. If the pot of gold at the end of the rainbow is a $10-trillion opportunity, just talking about autonomy, the only thing I care about is, will Tesla be first to the end of the rainbow and will they take a large slice of the riches? And the answer is inevitably yes. One final thing to discuss is Tesla's Robotaxi event on 10/10. Tesla is undoubtedly going to unveil hardware, a vehicle, a dedicated Robotaxi designed specifically with autonomy in mind. No steering wheel, no pedals. This is a huge multi-billion-dollar bet on the commercialization of autonomy, which requires not only the software to be safe enough for Tesla to be comfortable to push data to regulators and ask for approval, but for regulators to approve it. At any point in Tesla's history, they could have unveiled and then began production on a dedicated Robotaxi, yet it has not yet happened. It's only now that the event on 10/10 is taking place. So if we pay attention to Tesla's actions, we've seen the progress of autonomy, the breakthrough, completely retraining it end-to-end on video. That was massive. We've seen what it's doing since, the leaps and bounds improvements. We're hearing the number of interventions per mile is halving and halving and halving. And now they're going to be unveiling the actual product. All signs point to autonomy, relatively speaking, being around the corner. I suspect internally Tesla, highly confident that within the next 24 months at most, and the worst case maybe a little bit longer, but probably less than that, they're going to be operating Robotaxis in some pockets of the United States and maybe elsewhere. But even if that's not the case, can't be much further off. So forget what Tesla has said historically about when they expect the first intervention-free drive and coast. Who cares what's happened in the past with their predictions? Forget their predictions. Look what's actually happening with the technology. Who cares about their predictions? What's actually happening?
That it at some point tomorrow becomes today and they do have autonomous Teslas. What is it about Tesla that'll be able to capture the value from autonomous when you have a lot of other companies who are making similar, better progress around autonomous? So
Sure.
Oh, Jesus, dude. Did he just say there are other companies, lots of other companies making similar or better progress around autonomy? Scott, my friend, there are none. Now, I know Scott doesn't have time to be watching this, but if he were watching, right now he'd be thinking, this guy's just a deluded Tesla fanboy. Get your Elon's dick out of your mouth, bro. This is an important piece of the puzzle. Remember I said earlier about Tesla getting first to the end of the rainbow? Yeah? There's a reason I'm confident this is going to happen. There are no other companies doing what Tesla's doing. I'm sure everyone watching is familiar with a hedge maze, right? You trim hedges in a certain way. You got a little maze. You get in there, you get lost. 90-degree turns everywhere. But eventually you can find your way to the center and or back out, right? Now, imagine this. Imagine that you had unlimited time and you decide to do a magic trick. What you do is practice 12 hours a day, finding your way out of that hedge maze with the blindfold on. At first, you're probably going to struggle, but with enough practice and familiarity with this unchanging environment, you would be able to don a blindfold and, unable to see, seamlessly navigate your way out of the hedge maze. Stunning onlookers. Wow, how the fuck did you do that? You must be able to see through that blindfold. That's incredible. When in actual fact, you just had pulled off a nice little trick. This is exactly what Tesla's so-called competition are doing. Tesla's working on a solution that looks out into the world, sees and perceives and plans and acts. It's a form of real-world intelligence. The equivalent here in this metaphor, if you were to drop a Tesla vehicle in the hedge maze, having never been in the hedge maze before, it will find its way out. What these companies that Scott believes are doing a better job and making more progress with autonomy than Tesla. What Scott thinks these companies are doing is what Tesla's doing. You drop it into a hedge maze and oh, cool. But this is not the case. Cruise, RIP, Waymo and so on need to be intimately familiar with the environment. It needs to be pre-mapped in high definition. Every square inch, every object, every curb, everything in the environment. And then their vehicles with fuck tons of expensive sensors. Each vehicle, by the way, instead of being sold to a customer like Tesla's currently doing and making money on them, costing these companies $100,000+. They then need to bounce signals, literally, look at the LiDAR, bounce a signal off shit and go, oh yeah, that thing's still there. Nope, that curb's still exactly that many inches high and it hasn't moved, so I know where it is. It's the hedge maze trick. They know where every turn is already, and as long as nothing changes, As long as one of the hedges doesn't become overgrown, or somebody pulls a branch off, everything's fine. But as soon as something changes, they're fucked. They become death machines on wheels, or they just pull over and block traffic and cause incidents. Companies like Waymo will never, in a reasonable time frame, be able to scale widely or rapidly. It just ain't going to happen because they have a completely... Can you just imagine trying to pull off that hedge maze trick, not just in one hedge maze, but if the entire world was a gigantic hedge maze? You nail one little portion a few feet by a few feet, and now you've got to scale and manually map the next one and do that. It doesn't work. So Scotty's asking good questions, but he's got very bad information and or thoughts. To actually genuinely believe that there are companies that are further ahead in terms of autonomy than Tesla, embarrassing. Another example, I think, of too smart for your own good syndrome.
Like Waymo and others.
Yeah. So what industry would you compare this to that justifies the 99 PE? And two, why do you think Tesla is uniquely positioned to capture margin and revenues from autonomous over some of the other autonomous guys?
Look, I've always viewed it from disruptive tech. When I look at Apple, Meta, I look at other software names, I look at what I view as not just Mag 7, but called the top 15, 20 disruptive tech companies in the world. And I'd also put Uber in there and some of the ride sharing. Now, in terms of just looking at it on a straight PE, look, you're never going to get comfort with Tesla. My view is look out the next 4 or 5 years. What can free cash flow ultimately be? What could the profitability margins be on software, on autonomous? And does that ultimately change not just the narrative, but I think the valuation narrative? But you hit the great point because the issue on autonomous has been going back to 2019 Robotaxi. Okay, it's coming tomorrow. It's coming next week. That's why I think when I look at Robotaxi Day, now 10/10, October 10th, it's a historical day, one way or another. Either this starts the vision for bulls like myself or Kathy, it feeds in other words, now it actually shows execution. This is how they're going to monetize. Or to your point, if it's disappointing, then it gives the bears legitimacy. That's why I view it was originally August 8th, now October 10th, as really a seminal moment in the Tesla story going forward.
So there is some validity in what Dan's saying, but I am going to strongly disagree with the overall sentiment. Autonomy Day is just a signal that Tesla now believes clearly, they're putting their money where their mouth is, that it's prime time. We're here. But, hello, what have I been saying since the end-to-end rewrite of FSD? The exact same thing. Those paying close enough attention can already see the writing on the wall with autonomy. And prior to that rewrite, this was not the case. But ever since that demonstration in Palo Alto where Musk was being driven around by the vehicle on the new software that was trained purely on video of good human drivers, and we're able to see the capabilities roughly on par with the existing software, despite having deleted 300,000 lines of code, and now to watch the progress since. That's when things changed. Of course, a lot of investors and many folks on Wall Street seem to like pretty presentations, so maybe this will change their perceptions. But I can already spoil Autonomy Day. I mean, I've told you guys what's going to happen at this Robotaxi event, right? Tesla's going to unveil a new vehicle, no wheel and pedals, probably a couple of variations on that platform, maybe a 2-seater or maybe a 4 or 5, but fairly compact, possibly a high-density version of van, maybe 8, 10, 12 plus passengers. They may also slip in, but don't count on it, that they're also going to be developing a more affordable vehicle to sell to consumers on the same platform as the dedicated Robotaxi. They're also going to reiterate the fact that they're close to solving autonomy. They'll probably demo the Tesla Ride-Hail app, and they'll emphasize the fact that they're going to be seeking regulatory approval as soon as they're comfortable with safety profiles region after region, and it's going to happen really soon. The fact that I can make these predictions now with a fairly high level of confidence just goes to show that we're not actually going to learn anything meaningful or needle-moving at this event on 10/10. It may come as a surprise to some institutional investors, but we already know what's going to happen. It shouldn't change the story. I can already tell you what's in the chapter on 10/10. But to Dan's point, sometimes perception matters a lot more than reality. And perceptions may change after this magical event in which Tesla, in essence, goes, yeah, so we've been working on autonomy. We nearly solved it now. We're going to start making some robotaxis, motherfuckers. Let's go. AKA nothing new to see here.
When does time run out on that narrative? I mean, say we get to October. I mean, Scott said it's been happening for 7 years. It's been happening for 10 years, actually. He's been saying this since 2014, not about robotaxis, but about full self-driving. And what's remarkable to me is the fact that, I've been waiting for that seminal moment to come, like you say, for years now. Like, I think people said this about August. It was supposed to come in August. And then for whatever reason, Elon said, actually, no, we're going to push it to October. And every time it feels like the market is okay with it. They're a little pissed off. Maybe they're a little disappointed. But I'm just surprised that moment hasn't come. So I'd love to know what you think will happen if come October, Elon says, actually, sorry, we're going to need to wait another 3 months.
Yeah, look, I think
this is such a wild discussion. Quite fascinating, by the way. Now, this is a fair question. If the event was delayed another 3 months, is the pot of gold at the end of the rainbow still the same size? Yes. Is Tesla still far and away the closest company to reaching the end of the rainbow? Yes. Is there any hope in hell that anyone else could overtake Tesla on the way to the end of the rainbow? No. Therefore, who cares? What would be a needle mover is if Tesla said, you know what, we cancelled the Robotaxi event entirely. We're not going to make one because we don't think we're close to solving autonomy and we don't want to burn billions of dollars trying to produce vehicles that will sit around doing absolutely nothing.
it goes in ebbs and flows talking to investors. Now, clearly, like, look, you're going to have a camp. I mean, if Scott or others are in there where like they're just core bears, they've been negative on the story. There have been some areas they've been right. Then on the other side, it's like bulls. No matter what Elon does, they're bullish, right? So it's like, what's on both sides? I think for most investors, institutional, hedge funds, mutual funds, it's really trying to now show the next 12, 18 months. I won't say the time's up, but now it's at a point like either walk the walk, don't just talk. Next 12 to 18 months, you need to show not just 12.5, but in terms of the latest FSD, you got to show the path to autonomous. What does Robotaxi look like with the fleet? Because if you go back to like this last quarter, the frustration is the bears will say it was all credits. It was a disappointing quarter. They essentially missed on other metrics. Margins were under pressure. Yet the bulls are focused on autonomous and full self-driving and Robotaxi day. So I think that's sort of the issue in terms of where this is all heading, is that now it kind of comes to a point where they need to actually put up the numbers, show the vision. And look, this is a stock a year from now. It's either 300 or much lower. In other words, I don't view this as one where it's just steady and it just sort of treads water. It's either like huge, this is the next chapter of the story, otherwise disappointment.
But if you're an analyst and you're trying to help people build economic security, and you have potentially it doubles or say even it triples, my scenario, more likely scenario, and I have trouble. I want to be clear. I have trouble separating my emotions. I do not like the man. I think it's a terrible.
Yo! This is the most incredible thing I've ever heard from a Tesla bear. Scott has just admitted the truth and just explained literally every Tesla bear on the planet. I have to give the guy credit. I mean, he knows his blind spot. We have to listen to this again. The dude's literally just explaining every Tesla bear on the planet. I mean, I've got to give credit. The guy's got A, self-awareness, and B, he's being honest. But then again, he's a pretty deranged dude. See some of the stuff he says about Orange Man bad. So we're going to rewind this, and I can see where it's coming. I have trouble separating my emotion because Elon bad. Elon is and now insert everything. He's going to say, like, I don't know, white supremacist, a Nazi, like whatever it is, some random BS that he's heard in the fake news. It's coming. And there's going to be a torrent. He won't be able to help himself. But the fact that he's acknowledging he can't separate his emotions, the hilarity, of course, is these emotions have been generated not by Musk's actions, but by the little thought bubble that Scott exists in and a lot of fake news. But I've got to give him credit, though. This is amazing. So let's rewind a little bit and hear him say, I have trouble separating my emotions because Elon's a Nazi. He's the worst human that's ever existed on Earth. Elon bad.
And you have potentially it doubles or say even it triples. My scenario, more likely scenario, and I have trouble, I want to be clear, I have trouble separating my emotions. I do not like the man. I think he's a terrible role model for young men. And I have trouble distinguishing my disdain for him. But let's just be I'm going to try and be unemotional. And I think I'm being unemotional. And I say, okay, the company wants to talk about anything but cars because there's no way to justify this valuation if they have to at some point come out of the closet as an actual car company.
Now, just to be clear, Tesla, the company, does not need to do shit. Does not need to justify its valuation. In fact, the leader of the company on multiple occasions has said things along the lines of, he believes that Tesla stock price is too high and has strongly advised people who don't believe Tesla's going to solve autonomy do not own the fucking stock. Tesla's board of directors don't convene on a daily basis to decide what investors are paying for Tesla stock. That's something the market sorts out just from buying and selling activity. Tesla isn't out here convincing investors to buy the stock or the stock should be higher or lower. They don't give a shit. They're just busy executing. Scott, while doing his best to separate his disdain from Elon Musk, who he believes is a terrible role model, I mean, after all, adding enormous value, employing well in excess of 100,000 people, protecting and providing for family, what a terrible role model. Scott appears to be under the impression that Tesla, the company, and or Elon Musk are interested in propping up the price of Tesla stock. That's my impression of what he's saying. But they couldn't give a flying fuck. Tesla's busy executing. They're telling investors who aren't overcome by their emotions what they're working on. They're showing examples of their progress. They're being completely transparent with their plans, their intentions, how they're going, and allowing investors to make up their own mind. Scott seems to be under the impression that Tesla themselves are trying to justify their valuation. Bro, they're literally just saying, here's what we're trying to do. Here's what we are doing. Oh, P.S. if you don't believe we're going to be successful in doing what we're saying we're trying to do, don't own the fucking stock. Do people really think like this? I mean, again, credit where it's due. He admits he's overcome by his emotions and he can't really... But is he really under the impression that Tesla is trying to pump up their stock price with promises around autonomy? Bro, they're literally just telling us what they're trying to do and executing against their publicly stated goals. Tesla ain't Nikola. Elon ain't Trevor Milton.
By the way, I think it's an amazing car company. I owned a Model X Falcon. I loved it.
What color?
Oh, I had the dark charcoal gray.
Oh, yeah.
You know, the one with the weird doors that fly up?
Yeah.
I really enjoyed it. It's a great car. And then he insulted me on Twitter and I took a big fucking dump in the passenger seat and sold it. Is that too much? What do you think, Dan?
Wow. It does appear that Scott took that insult personally. Dan's face.
Yeah, nice.
I mean, it's a little extreme, but again, it teaches on.
By the way, that took the resale value down. So here's the scenario and why I would avoid the stock right now. Tomorrow keeps becoming tomorrow around autonomous driving. It continues to be something that's much more difficult than anyone had anticipated. And he has to come out and say, it's not coming out this year or next year, although he has a capacity to consistently look people in the face and say it'll be out next year with no underlying truth to that. You have a company where they say, all right, the power stuff is amazing. Let's value that at 30 or 40 times earnings. It's a better auto company. Let's put it at somewhere between GM and Ferrari at 25. And the sales of the automobiles continue to flatline. I think they were even down last quarter. I see a scenario where if you didn't know this company was at $220 and you woke up and it was at 40, you would say, well, of course it's at 40, and it would still be a highly valued automobile company. So I see a scenario where it's down 80%. I also can see a scenario where it goes up twofold because it is sort of a meme stock. But if you're a fiduciary for other people's money, isn't the downside scenario here much greater than the upside?
Yeah, I've never...
$40, bro. If only that were to happen, holy shit, bro. I would definitely be launching my second, third, and fourth secret OnlyFans to cash in and load up on the stock at $40 a share, bro. It's interesting, by the way, to hear from Scott that he genuinely believes that $40 would be a possible scenario where it seems that he's suggesting that that's where Tesla would be fairly valued. But he's also acknowledged that it could double because it's a meme stock, aka retail investors are dumb fucks and therefore they buy the stock, as opposed to perhaps they see something inevitable that Scott can't because of his emotions. By the way, I just want to put this in perspective. As I record this, Tesla is around $220 a share. For Tesla to reach about $40 a share, the stock would have to crash by 50%. And then it would have to crash by 50% again. Technically possible, but I've got a funny feeling that even Tesla bears, well before $40, would be backing the truck up and buying Tesla stock hand over fist.
And look, I mean, full disclosure, always been bullish, whatever, the last 10 years on it.
Oh, so you've done well. You've been. I just want to give you credit. You've been right so far.
I've been right, but we've gone through periods where we were dead wrong. Like you said, it's not like it's straight. We went through periods where investors are like, what are you doing? Like, how could you be? It doesn't make sense, right? So there's definitely been like gut check moments. I think we're going through like a gut check moment. What I mean is that you can have growth on cars continue to decline. You need to increase in terms of growth. You got to get to 7, 8, 9 million vehicles, over the next years. You can't continue to cut prices. We need that to flatline margins need to get back. Let's say Auto X credits were 20%. Then there's the other piece of the story. I believe autonomous. I'm a big believer in autonomous, and I'm a big believer in Waymo and just where this technology is heading. That's the bull case scenario. But that's also why, like, look, we spend so much time on our names traveling around the world to make sure our thesis, of course, you can be wrong here and there, to make sure, like, we're not going to be dramatically off. And if we are, then we'd have to reevaluate.
I'll ask you, Dan, which part of Tesla's business are you most optimistic about? I mean, we've been talking about the robotaxis, but there's like, there are a lot of forward-leaning tech narratives. There's like robotaxis, the humanoid robots, there's the AI. Which part of the Tesla verse do you find most compelling?
To me, it's really more, my view is EVs are 5% of overall auto. I'm not saying it goes to 100%. It goes to 25%.
See, just when Dan had been making a lot of sense, he comes out and says that. I will take the other side. Electric vehicles are going to approximately 100% of all new vehicles sold. And just a quick fact check, EVs maybe in the US around 5%. Globally last year, roughly 10% of all vehicles sold were fully electric. That's gone to 10x to roughly 100%. This is inevitable. Cost declines continue to come down. I mean, hello, I've been over this whole narrative. I'm not sure what Dan is smoking, but given his fashion sense, it's probably pretty strong. I hope he saves some for me. But what does he think the other 70% of vehicles sold are going to be in the future?
They're going to have a big share of that. In other words, like that's probably the one that I'm most bullish on in terms of just, I'm not one of these, like everything goes green, 100% EV, but you are going through biggest transformation to the auto industry since 1950s. I do think it's the reason we're bullish on GM as well. I think GM is going to be a huge.
Okay, oh God, the credibility's just gone completely out the window. Bullish on GM. With the absolute worst leader of any actual automotive company on earth, bullish on GM. Who didn't lead, don't matter, and ahead of a bankruptcy. I think I've just realised what Dan thinks the other 70% of vehicles sold in the future are going to be. Internal combustion engine or internal combustion engines with a tiny little battery shoved in them, also known as internal combustion engine vehicles, not hybrids. In that scenario, you could understand why Dan would imagine that GM would in fact still be solvent in the future. He's going to be so wrong it's going to hurt. Now, I'd really love to know. I'd love to sit down with Dan. I'm not going to. But I'd love someone to ask Dan, what do your projections show a company would be able to produce an electric vehicle comparable to today's Model 3 or Model Y for 10 years from now? The answer to that question will be a green tidal wave. I don't think Dan's done the numbers. Because had he and his team done the numbers here and looked historically what's happened with the cost of batteries over time, also considering Wright's law, looking at evidence of Tesla's own cost declines, not just in the batteries, but how they're putting vehicles together, looking at the continuous innovations, the reduction of parts and processes in manufacturing vehicles, factoring in Tesla's modular, aka unboxed manufacturing system, the implementation of the modular manufacturing, plus potentially humanoid robots for labour. Had Dan and his team actually done the numbers here, they would probably come up with a number 10 years from now where a company like Tesla could produce a vehicle like a Model 3 or Model Y, comparable range, performance, features and functionality, basically the same, or close enough, not in the mid 30,000s. Remember, they don't sell them for that, but they do have a profit on top. But for sub 20,000, probably like 15, maybe 17, $18,000. And if that were the case, Dan would be going, hang on a minute. So you're telling me a decade from now, Tesla could be producing a vehicle comparable to the Model Y today, which is available for roughly just a little bit less than the average new vehicle in the US, for half the average new vehicle in the US. Okay. And you're telling me that the internal combustion engine vehicle's been around for like over a century and is not experiencing the same cost declines and can't. So their price is going to be roughly steady and EVs are going to basically halve over the next 10 years. And you're telling me that if it's about half the price, consumers will buy more of them, meaning that there'll be less ICE vehicles, meaning reversing economies of scale, meaning the ICE vehicle cost will actually go up at the same time EVs continue to plunge in cost. So you're telling me, oh, I get it. I finally get it. GM's fucked. I really would love to know what Dan thinks about this, if he thinks about this. I mean, the only possible explanation is either he hasn't thought about this, or for whatever reason, he and his team just simply do not believe that the cost to produce compelling electric vehicles will continue to come down meaningfully over time. I mean, this is a doozy. I've got to hear that again.
One of these, like everything goes green, 100% EV, but you are going through biggest transformation to the auto industry since 1950s. I do think it's the reason we're bullish on GM as well. I think GM is going to be a huge benefit there. Ford, obviously, a lot more difficulty that Farley's going through there. That, at the premise, is our bull thesis. In other words, like we're not just bullish on Tesla because of X, Y, and Z in the future. At the core, it's a belief that EVs as a percent globally are going to go 15, 20, 25%. And now, 4 or 5x from where it is today.
This is unbelievable, bro. There's absolutely no way that Dan and his team have modeled out EV cost declines over time. There's no way. The upper limits of what he was suggesting there was 25% of all new vehicles sold being electric. Globally last year it was already 10. This is wild to hear.
Presumably the market share of Tesla is going to be diluted way down under that scenario. I feel like we're already seeing that.
Of course it will come down.
Yeah. Okay.
It'll definitely come down. I think the biggest issue is China. And also we're big believers like BYD, NIO. This is not like zero-sum game type view. I mean, that's why we've been bullish in the sector. We're not one of these where it's like, just Tesla like that. It speaks to maybe a broader view, just like our view in like AI. You don't just own NVIDIA, you own Microsoft, you own Palantir, you own Google, you own Amazon, Apple being one of our favorites. Yeah, that's how we I think how we've always navigated tech.
What a wild video. Dan Ives, Tesla bull, apparently says some things that make sense, sort of, and then self-immolates, stating in no uncertain terms that he/Wedbush Securities are quite bullish on GM, that electric vehicles as a percent of all new vehicles sold apparently will never exceed roughly 20, maybe 25% of all vehicles sold, which kind of exposes a complete lack of understanding and or research and analysis on the cost declines. Very awkward. Oops, probably shouldn't have said that out loud. And a long-term Elon hater / Tesla bear, which tends to be the same thing, admits that he has a very hard time separating his emotions from a unbiased analysis of Tesla. Also outs himself as foolishly thinking that there are companies far ahead of Tesla in terms of autonomy. And I'm left scratching my head. If Dan Ives, a supposed Tesla bull, remains quite bullish despite believing the market opportunity for electric vehicles is roughly 1/4 the actual scale, and his thesis, as in his own words, is predominantly based on Tesla taking a decent slice of that small opportunity. Again, I believe it's going to be 100% roughly, not up to 25%. What would the Wedbush price target for Tesla look like if Dan was suddenly to be of the opinion that Tesla would be going after an electric vehicle opportunity that didn't eventually maybe reach 20-25% of all new vehicles sold, but in fact 100%? By the way, real talk, if anyone happens to have a copy of the valuation model from Wedbush Securities on Tesla, I'd love a copy. Hit me up on X, send me a DM. In particular, I'm very curious about their research around EV cost declines or a lack thereof. It's got to be one of the most stunning things I've ever heard Dan admit. I mean, I'm speechless, bro. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. Plenty more to come. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, These are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game has improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.